Imagine taking every dollar you earn in your 20s and making it work harder than you ever could. By the time I hit 30, my portfolio crossed 130,000, and it wasn't just luck. In this video, let me walk you through my journey, the lessons I learned along the way, and most importantly, how you can build your own 6-digit portfolio today. I used to think that ultimate wealth was reserved for the lucky few. Well, for the rest of us, trapped in an endless cycle of work hard, earn money, spend it, and repeat. Sounds familiar? But then, I came across something called Gresham's Law, and everything changed. Gresham's Law basically states that bad money drives out good money. Think about it. If you have a pure gold coin and a dollar bill, both worth the same amount, which one will you spend first? The dollar bill, right? Every single time. Why? Because gold, the good money, feels more valuable, and you rather hold on to it. Same thing with our money today. Bad money is like all the extra cash the government prints. It inflates the money supply, devalues your hard-earned savings, and reduces your purchasing power. Remember when $10 could get you 2 slices of pizza? Now, it can barely buy you one. That's the sneaky cost of bad money. So, what can you do? It's actually pretty simple. Protect your wealth by investing in good money. This means putting your hard-earned cash into assets like stocks, precious metal, and real estate. Basically, anything that holds its value or appreciates over time. These investments act as a shield, keeping your buying power intact and helping you stay ahead, especially when the value of dollar keeps dropping. Now, when I first started investing, I was totally clueless. I didn't even know what a stock was, let alone how to pick one. So, what did I do? I chickened out and went with the crowd. I picked the S&P 500 Index Fund, ticker BOO. It's a fund that invests in 500 awesome companies like Apple, Microsoft, and Amazon. It's simple, it's easy, and honestly, it just works. BOO isn't about chasing quick gains. It's about building something solid for the long run. I knew that over time, the stock market tends to climb higher, and BOO was my ticket to financial freedom. I started small, just $10,000 from my savings. But here's the thing, I made it a habit to add $1,000 to $2,000 every month, sticking to a dollar cost averaging strategy. Basically, I invested consistently, no matter what the market was doing. Market goes up, you buy. Market goes down, cry a bit, then buy more. And trust me, over the long haul, you will do well. If you have found this video helpful so far, consider smashing the subscribe button now so you never miss out on our latest content to level up your financial game. Plus, it's a great way to support the channel and help me continue creating awesome content just for you. Now, in my first year of investing, I've made about $2,000. I was like, whoa, seriously? Free money without working? From that moment on, I was hooked. It was like I just unlocked some cheat code to wealth. Every dollar I could save went straight into my investments, and as my portfolio grew, that magic of compounding kicked in. My money started snowballing, earning returns on gains I have already made. And honestly, it was very addictive. That said, things weren't all smooth sailing. By my 3rd year of investing, I started to get a little too cocky. BOO was doing great, but I wanted more. I wanted to get rich fast. I wanted those explosive returns. So, here's what I did. I threw caution out the window and started chasing trends. Bought into a bunch of hype stocks without doing any real research, and totally ditched diversification. Spoiler alert, it was a disaster. My portfolio took a massive plunge. I lost thousands of dollars and I felt like a complete idiot. All that hard work gone in a blink of an eye. Another mistake I made, not knowing when to cut my losses. I kept thinking, it's just a temporary dip. It will definitely bounce back. Hey, I wait. But the price kept falling. 10%, 20%, 30%. It was like watching my money deplete in slow motion. Finally, I couldn't take it anymore. I sold at a massive loss. All this could have been avoided if I just stuck to a simple stop loss policy. Something like, if this stock drops by 10%, I'm out. Honestly, that one rule has saved me thousands of dollars. But you know what? I've learned my lesson. Always do your research, set your stop loss, and don't let greed cloud your judgment. And today, I'm stronger and wiser because of it. Looking back, my biggest mistake was waiting. I waited until my mid-20s to start investing. I spent my early 20s blowing money on trendy clothes, the latest gadget, and weekend trips I couldn't even afford. All that cash could have been compounding, making me more money. Instead, I traded long-term growth for meaningless short-term thrills. And trust me, the biggest cost of waiting isn't even the money. It's the time you'll never get back. The earlier you start, the more time your money has to grow. Let's do some math. Let's say I take my $130,000 portfolio, invest it all into VOO, and invest an additional $1,000 every month. Assuming a return of 10% per year, how long do you think it will take me to hit millionaire status? Just 15 years. That's it! 15 years of consistent investing and boom! Millionaire status. Now, let's play a different game. What if I ditch investing and just stash the same $1,000 every month under my mattress? How long do you think it will take to hit millionaire status? 73 years. I'll be long gone before I even came close. And that's the power of early investing and compound interest. Your money makes money, and then that money makes even more money. But if you want to accelerate your portfolio growth and don't mind adding a little risk, single stocks could be the way to go. I'm talking about companies you believe in. Those are disrupting industries, creating innovative products, and changing the world. Just remember, do your research, set your stop loss, and don't let greed cloud your judgment. What I would recommend is putting a small portion of your portfolio, maybe 10 to 30% to individual stocks. Think of it as your fun money, your chance to play the market and potentially score bigger rewards. Now, if you're not sure where to start or what to invest in, I've got you covered. I have a whole buy or sell playlist where I provide single stock analysis, covering everything from company's financial to its outlook, valuations, technical analysis, and price targets, all in just under 3 minutes. Link in the description below. And that's it for today. If you have found this video helpful, make sure to like, subscribe, and drop a comment below. Thanks for watching and see you in the next video.